Hello, I'm Dan Ridsdale, Head of TMT at Edison, and today I'm joined by Tim Pullen, CFO at IQE. Tim, you've just reported your interim results, your H1 2021 results. Can you just talk us through the key headlines from the announcement?
Yes, hi Dan. We've reported our first half financials for 2021, and that really sees us maintaining the very strong level of performance that we recorded last year in 2020. Despite the significant headwind of a delay to global 5G rollouts. And that means that we've maintained revenue at constant currency year on year at 79.5 million, and also have a similar EBITDA at current constant currency as well at 12 million.
Great. And you flagged slower 5G infrastructure rollout as a headwind. Can you just discuss how the 5G cycle is playing out for IQE?
We saw significant growth last year in the infrastructure build of 5G, particularly in China, where there were significant amounts of massive MIMO base stations rolled out. And these are using at their core our GaN on silicon carbide material, which goes into the antenna elements of the base station to provide that very high frequency performance that 5G massive MIMO needs. As we came into 2021, we saw and flagged in March that there would be a slowdown in that China rollout as the first wave really comes to an end, and really as the mobile network operators across the globe, including China but elsewhere as well, grapple with how they deploy their capex to best make use of the spectrum that they've invested in, and grow their 5G subscriber base in line with their infrastructure. And that means that there's a bit of a stuttering start, I think, to the 5G cycle, but we know that the network operators will be rolling out and that this will be a multi-year cycle really to put these high speed, high capacity and low latency networks in place. Probably a really good leading indicator of the infrastructure coming back is the handset sales that we've experienced in the first half of 2021. So our gallium arsenide product that goes into the power amplifier for the smartphone handsets has really grown well in the first half and actually made up the shortfall completely that we've seen year on year in the infrastructure side. That's driven by 5G penetration in the handset market, but also by Wi-Fi 6, which is using the same gallium arsenide material. And that growth in the 5G subscriber base really is that strong leading indicator that the mobile network operators will be resuming their infrastructure build to build out those 5G networks.
And just looking at the photonics side of the business, that was slightly down year on year. What does that really mean for the growth prospects within that market?
Photonics down, as you say, year on year slightly, and that's really due to the smaller chip size for the Face ID component within a key supply chain for us. And despite that, though, we've maintained a really strong competitive position, and that's really on two fronts. First of all, we've maintained very good market share. But secondly, we've made real strides in our development for long wavelength VCSELs. And these are really exciting because they can sit beneath the OLED screen, which is a really attractive proposition to handset makers. And also we maintain a really strong competitive advantage in that development because it's produced on our MBE platform in North Carolina, where we have some underutilized capacity.
And looking at currency, you've currently got quite a significant currency headwind. What does that mean for the business and what are you doing about it?
Yeah, so we've seen a headwind of about 8 million at the revenue level. We say we're constant year on year at constant currency, but of course that headwind affects us on a reported basis. And it's important to note that it is purely about financial reporting, where you're recording your revenue in dollars, but then reporting your results in pounds. And obviously that happens at the spot rate. You can't hedge financial reporting. Where we do hedge, of course, is where we're translating our currencies, converting our currencies. So if we need to change dollars that we've earned in revenue into pounds, for example, to pay for our GBP cost base, then of course we have a typical hedging approach in there so that we're smoothing the effects of FX over time.
So you've got spare capacity in the group, yet you are investing in more tools. Can you explain why that is, please?
So across the IQE group, we have a really broad range of capabilities, and our ability to operate in 3 major continents across the world is a real competitive advantage for us. Each of our customers is qualified on multiple tools, and each of our tools is qualified for multiple customers. So that gives us as much operational flexibility as we possibly can. But some material systems can only be produced by certain tools. And of course, in each of our sites, we have very specific process know-how for particular products. So if we take Taiwan, for example, that's seen significant growth this year. That's our center of excellence for producing gallium arsenide wireless products that's seen such significant growth in the first half of this year. And that's where we're putting the majority of the tool investment now to build out that capacity. You may remember we had built out the infrastructure in Taiwan in 2018-19, so we've got the clean room space, and now we're filling that with tools. And obviously, as we do so, that's further increasing the economies of scale of what is already a profitable site. Of course, there are underutilized sites as well in the IQE group. I mentioned the MBE site in North Carolina. And we're taking action as well to make sure we're addressing those too, as well as the development of that exciting new long wavelength VCSEL product that will help increase volumes. We're of course also closing our Pennsylvania site and consolidating that into North Carolina, which is the larger, more modern site. And therefore we're optimizing that cost base as well as seeking to increase the volumes so that we can get the kind of profitability that we see in the Taiwan site, for example.
And thanks. And then looking towards the outlook, can you discuss the outlook for this year and then beyond that?
We're seeing that things will pretty much be the same in the second half. So our guidance is that the full year will be similar, both for revenue and EBITDA at constant currency, as we said for the first half. The timing of this 5G ramp is difficult to predict, but we are confident it will happen. We're really still at the start of this 5G cycle. We know that we have the leading products, we have the manufacturing capacity, and we've got ever strengthening customer relationships. So as that 5G cycle deploys, we're very confident that there's a multi-year growth cycle ahead of us.
Tim, thank you very much.
Thanks, Dan.